Righto. I won't even say money miners. Righto, tin barons. Gee, this is an absolute tin spectacular coming your way, but bullish and bearish. Something special about this, Trav.
Bit of both. I think both are long-term fundamental bulls. And then the second guest is like just a bit more moderate in the short term. But we've got the king of tin himself, Mr. Mark Thompson, and the second guest that follows Mark is I'll call him the mercenary of tin. He's a commodity trader, Hadley Natus. And both of them are just like tenured in tin. Can't wait to reveal their thoughts to the money miners.
There you go, mate. Thumbnail of the year, by the way, Trav. Right, let's. Okay, so part one, mate. Part one, part two. Part one is Tomo. Part two, Hadley. You got to listen to both.
Yeah,
mandatory, and they're in order, not Pulp Fiction. Right, let's get into part one with the short-term, long-term, medium-term bull of tin, Mr. Tin himself, Mark Thompson.
Here we go.
We're glad we've got the king of tin on the podcast to talk all about it.
The king of tin.
Good. What do you want to know?
Well, mate, I'd love to talk through. I mean, you've obviously had experiences of metals, sort of hedge fund dynamics, and I think we'd get a lot of benefit sort of speaking through the two threads that you've recently put up. One of them obviously relating to the long-term tin story. So we're a better place to start than take us back through time on the journey of tin, Mark.
Well, I think this is important to do in this market because, great bull markets don't just happen. They're built over decades, and there's always a backstory. And I think the key to understanding why tin is here to stay and is going to go to stupid prices on this on this cycle is why there are so few projects. And there are so few projects because the tin price has been so very, very low for the best part of 4 decades, since 1985 and the collapse of an organisation called the International Tin Council. But we'll go back a little bit further than that to explain why the International Tin Council was formed, what the price they got the tin price to, and what the consequences of that were. So we go all the way back to just after the Second World War, 1945, 1947, the sort of kickoff of the Cold War. And, the US was competing with the USSR every way they could. They were competing for ideology, for resources, for influencing countries around the world. And they were also looking at, how to, militarily and economically, put themselves in a better position than the competing ideology. And one of the things that the US had always known was a weakness of the US economy was tin. There's almost no economic deposits. In fact, there's none of any significant size in North America. Tin does not occur in many places on the planet. You basically need a double enrichment process geologically. So background crustal abundance is about 2 parts per million. You need some sort of erosional process which concentrates that to 50 to 100 parts per million. Then a melting process turning that into a granite, and then a fluid flow process turning that into high grade veins and stockworks and mineable tin deposits. And none of those conditions ever existed in North America. So you've got the Southeast Asia tin belt, you've got the Variscan origin in Europe, running from Cornwall into the Erzgebirge and slightly east of that in Germany, South America, Central Africa, and in Australia, and that's pretty much it. So the US basically realized that, as the world was turning to electronics, this was the start of the electronics age, and tin was very obviously going to be a very large part of electronics because tin was solder, and solder was what you required to join electronic components together. So they looked at the Russian economy and realized that Russia was a little bit weak in tin as well. So the US was consuming, 30,000 tons a year of tin. Russia was consuming 15,000 tons and only producing about 5,000 tons and buying the rest of it from Southeast Asia and China. So the US, under the guise of the predecessor to what is now the Defense Logistics Agency, went out and bought 360,000 tons of tin as a stockpile in 8 years. And this was when the market was only about 120,000 tons a year. I mean, it's just a staggering number that you could buy 3 years worth of world supply of any commodity in 8 years. You know, it would be the equivalent of buying 75 million tons of copper today. You know, it's just a staggering amount.
What happened to the
but they
price
did
at
it.
that
They drove the
time?
tin price up.
Yep, that was my exact question. What sort of happened to the tin price over that period?
Yeah, extremely volatile. I remember you were coming off the back of the Second World War. Prices had collapsed as well because suddenly your uses for armaments, you know, as brass casings, as a lot of uses for tin in munitions and etc. So the tin price was down. The US was helping to stabilise the economies of Southeast Asia and Bolivia and Peru in particular, which were on the sort of path to communism. They wanted good economies there. They didn't want bad economies potentially pushing these countries into communist hands. So there was a kind of like a dual purpose for doing this. It was support people where we wanted political influence by buying the commodity they most produce, and at the same time build a stockpile. But obviously, when you buy that volume, the price goes up, and particularly because Russia basically was being starved of tin, and they effectively sent an army of geologists with an instruction to go and find tin in Siberia, which they did in vast quantities. And by the middle of the 1950s, Russia was actually turned net exporter of tin. So the squeeze had failed. The US stopped buying tin in 1956, and the tin price, rather unsurprisingly, absolutely crashed. It dropped about 2/3 in the course of about 9 months. So these shenanigans weren't really good for anybody. It wasn't working for producer nations to have massive volatility on their biggest export, and it wasn't working for consumer countries wanting to have, you know, effectively planned economies and known prices for their inputs. So there was an organisation which had been mooted for a number of years, which was finally set up in 1955, called the International Tin Council. And there was, I think it was 24 original members, 18 consumer countries, 6 producer countries. And the mandate of the ITC was to create a stable tin price where consumers had a predictable supply and a predictable price, and producers had a fair price and a predictable price they could sell at as well. And it was done so by basically giving quotas to the producing countries and by creating initially a 20,000 ton stockpile to act as a buffer. So if prices went up, the buffer stock manager would sell tin from the stockpile. And if prices went down, he would add to that stockpile. And the initial 24 countries contributed either cash or tin to get the ITC set up. And I have to say, it actually worked really well for the first sort of 10 or 15 years, and it kept in today's terms, sort of in a $25,000 to $35,000 range, you know, adjusted for inflation, and everybody was happy. As is often the case with these sort of quango multinational organisations, you know, over time the sort of corruption began to set in. And increasingly, ITC kept voting at its annual meetings to raise the floor price at the behest of the producers, and push on to the early 1980s, coming into 1985 when it all fell apart. The floor price in today's term was a little over $60,000 a ton. You know, today we're only at $32,000 a ton, and I'm extremely excited about that. But there was just massive quota busting going on. It was like OPEC in the 80s and 90s as well. You know, you had a quota, but no one really listened because you could sell more at a higher price. And basically, Brazil and Bolivia pulled out of the final agreement and just kept flooding the market with cheap tin. You get a little bit of a downturn, a bit of recession, early 1980s, and the buffer stock manager is sitting there buying tin. He borrows money against his stock. He has credit lines to trade derivatives, and he eventually gets to a point where he's long 80,000 tons of tin and 120,000 tons of derivative positions on the London Metal Exchange. And the merry-go-round ends because he runs out of money. He can't pay margin calls. He can't buy any more tin. And the tin price breaks through the floor price, and the price absolutely craters. The LME has to suspend the contract. It's suspended for a number of years whilst they work through this situation. And the ITC at that point had debts of £978 million that it couldn't pay. And everyone assumed that no country would walk away from this, but every single country member of the ITC walked away from that bad debt, leaving effectively the British government and the Bank of England to tidy up the mess. And I can't begin to explain how big a mess it was, because this was in the days before clearinghouses. So the reason that we have clearinghouses today, where broker A or bank A deals with broker B or bank B, and then they novate those contracts, each to having a contract with the clearinghouse and not directly to their counterparty, came directly about because of the crash of the tin price. Because we were in a situation then where small broker with maybe a £5 or £10 million capital base had contracts with hundreds of counterparties. And of course, as they go bankrupt, you take those counterparties, some of those counterparties down, which would snowball and take down 20 counterparties, would take down a couple of small banks, would take down a few big banks, and the whole financial system would collapse, which is why the Bank of England had to step in and effectively guarantee that that wouldn't happen by making loans available to the various parties. And that all led to the establishment of the London Clearing House a couple of years later. So, which was a good thing. So one good thing came out of the tin crash was that financial markets are much safer today because of the absolute complete and utter collapse of the tin price. So, and exacerbating this as well in the early 1980s, there'd been these massive alluvial tin discoveries offshore in Indonesia. So I don't know if you guys know this, but the vast majority of Indonesian production is offshore dredging.
Yeah, I've seen footage of it. It's pretty startling to watch it happen. Yeah,
I've been out on those dredges. It is just fascinating to watch. It is phenomenal the tonnage that you can move with a bucket line dredge or a cutter suction dredge, and they're good deposits. They're running 1,000 ppm, 1,500 ppm. 10 metres of water, 10 metres of cover, 1 metre or 2 metres of tin-bearing gravels. And they've been churning through that merrily for the last 40 years. At peak, Indonesia was doing 145,000 tonnes a year. Tin, last year they did 78,000 tonnes. We'll come to what they're going to do this year and going forward, I'm sure, a bit later. So you had this, and it's very, very cheap to produce, very high-quality concentrates, sort of 65% plus concentrates, which the smelters love, high-quality, clean product. So this was just making, it was just like a perfect storm for the tin price to collapse. So between 1985 and 1997, in fact, the actual low was 2005, tin price drops 93% in real terms, 93%. And effectively, I think it's easy to argue that 1985 was the last year there was any significant tin exploration globally for hard rock tin.
Can I stop you there just for a moment?
Because the price has been very, very low since.
Yeah, I just have to draw the parallels to so much of the story you've told of the history of tin to, in some ways, what we've sort of seen in lithium recently. I mean, tin, the original strategic metal, the stockpiling from the nation state, the latent supply that eventually came online, in a different way that and ultimately prices crashed 93%. There's so many parallels and so many geopolitical themes that obviously just don't get old. They just reemerge in different commodities where there are geopolitical strategic advantages.
No, I agree. And commodity changes in demand, new demand. You couldn't give lithium away 15 years ago. No one was interested, and now it's the hottest. One of the hottest commodities on the planet. We've been from 8,000 to 80,000, back to 12,000. And on the numbers, there's never going to be enough supply in the next 20 years if we do full conversion to electric vehicles. So we won't do full conversion to electric vehicles because it can't happen. So there's going to be some sort of longer time frame, or hybrids will be around for whatever. The market will find a solution. So and it will find an economically right lithium price where the right amount of lithium is produced for whatever price that people can afford to pay for automobiles.
I'll let you get back to the tin story.
There we go. Get back to the tin story. So and then exacerbating this. So ITC collapses. They've got 80,000 tonnes of tin to sell. But alongside that, in 1960, the US government decided that 360,000 tonnes of tin, when the Russians are actually now net exporters, was a little bit extravagant, and they should start selling it off just to get some cash. And it took them 45 years to sell all by the last 4,000 tonnes, which is about what's left in the stockpile today. And the last little bit they sold in 2005 at a price of $36.40, which by my charts is the lowest price anybody's ever sold tin ever, probably in 4,000 or 5,000 years worth of tin history. You have to be a government to sell at an all-time multi-thousand-year low. It was within a few weeks that they were selling that they topped off the Strategic Petroleum Reserve at $147.30, which is the highest price anyone's ever paid for oil. So, again, US government, not exactly the world's best traders. I like taking the other side of government trades on things. So when I was at Trafigura at the time, running Gleaner Asset Management, running the proprietary trading on base metals for Trafigura, we started taking a big position around that time. And then you kind of had the perfect storm for the next 7 years, because suddenly the world had been relying on these stockpile sales. The world had, there was massive above ground stocks of tin, but everyone just wasn't looking. Stocks got pretty low. And then you had this seismic change in demand, which was the impending banning the use of lead in electronic solder. So up to that point, electronic solders were typically 60% tin, 40% lead. And you created a substance with high electrical conductivity, a low melting point, and good mechanical stability. The problem with that is people working in soldering factories were breathing in lead fumes, and all the concomitant health issues that came from that. So the EU very much led the charge on this, banning the use of lead in consumer electronics, which ultimately would go upstream, down to the manufacturing places in Southeast Asia, which then had to, over the sort of the next 10 years, pretty much everybody converted to lead-free solder. And lead-free solder is 95% tin, 3% silver, 2% copper. And that's pretty much where the vast majority of solder electronics is today. So this was driving, for what was the biggest use of tin, a 50% increase in demand. At the same time that stockpiles were gone, the US was not selling anymore, and there was mad hedge fund punters like me buying it like it was going out of fashion. So it went from 2005 to 2012 up nearly tenfold in price to 32,000, and it was a really nice trade. We did very well out of it. So that was good. Obviously, you get a reaction on the consumption side, and the reaction from the electronics industry was miniaturization. So, and of course that was happening anyway as we were getting smartphones and smart tablets and computers and etc. So where printed circuit boards used to be big clunky things, today they're much, much smaller. The amount of tin per printed circuit board is much smaller. So even though we've seen exponential demand growth in electronics, we've seen linear miniaturization going on for about the last 15, 20 years. And I would argue that that's probably pretty much run its course. Anything that you can miniaturize on a printed circuit board has largely been done. And now we're back to a situation where demand is exponentially growing as people buy more and more consumer electronics, etc. It sits in the drawers. It doesn't get recycled. It's tin that's lost to the market, doesn't come back. So on the demand side, I'm extremely bullish on tin demand from its biggest single use. 50% of the market is solder, or maybe probably 51, 52% these days. So on the demand side on that sector is looking really good. So, go back to 2012 and tin's at 31,000. It was really looking like it could really just keep running and running and running. And then along came Myanmar to really delay the bull theory by 10 years, 12 years.
More supply.
So Myanmar in 2012 was producing 2,000 tons a year of tin. They discovered the more alluvial deposits, semi-alluvial deposits, and inside a couple of years, they were doing 60,000 tons a year of tin. Now, this is when the market was around, I guess, probably 340,000 tons a year. So 60,000 tons a year, 20% increase in supply in a couple of years was very, very significant. And it was extremely cheap to produce. It's literally pick it up, wash it. They were mining 1% gravels to begin with, 2% gravels. I mean, with the processing cost, so you were talking $600 rock with a processing cost of $5 a ton. They were literally printing cash. So that really crashed the tin price theory back down and put it on the back burner for a good few years. Took us back down to, I think the low was around 12,500, 13,000. And since then we've been bumming around between sort of a $15,000 to $25,000 range, with a blip to an all-time high at 50,000 during COVID, as I think we all remember, semiconductors, and there was a chip shortage because everyone was buying electronic devices to sit at home on the internet because we were all locked up during COVID. That's kind of how we've got to today. We're sitting at 32,000 today. Inventories in the West are pretty much exhausted. China's got a little bit of metal around, and we have supply problems left, right, and centre.
Let's talk about those supply problems. Yeah, Mark. So the first one I'd love to go into is Myanmar, which this is when I got interested in tin. Was all the rhetoric around the cessation of mining from Myanmar as of August 1st last year. How has that actually materialised? Has that actually panned out in reality? Is that supply going to be, stopped for how long? Is it indefinite? Like, what are the parameters around that supply, and why did it go offline, and how long will it stay offline?
Yeah, I'm going to confess to an inadequacy here. It's probably the one major tin mining area of the world I've never been to. So, all I know is what I read in the press, and you probably know as much as I do in terms of doing it. I've tried over the years to get out on the ground. I've never managed to get a permit, and I've never managed to get an invite. So I've never been out there. So I'm not sure how helpful anything. I can just regurgitate the stuff that I read in terms of, there was a military coup, got rid of Aung San Suu Kyi 4 or 5 years ago. And there's an insurgency going on. These mines are in the middle of the Golden Triangle, so tin is only the second most valuable commodity that comes out of that region. The other stuff they grow. And it's controlled by warlords, Chinese criminal whatever. It just seems to be a bit of a lawless territory over there. China obviously has a lot of influence because they're the buyer of the tin that comes out of it. But recently there was a whole series of arrests because there was a lot of scam call centers and illegal gambling centers just on the border into Myanmar, exactly where the tin goes across the one bridge into Yunnan province. And there's been attempts by the central government to control the tin, to control the money coming for it by putting a 30% royalty on it, which is tantamount to confiscation, and then by trying to cancel licenses and put egregious terms on it, which means it's utterly uninvestable. So as I understand it, there's very little official tin coming out of Myanmar. I should imagine there's still some unofficial tin coming out because China needs it, and there's always a way around the official numbers, and I'm sure brown envelopes can make things appear to be something on a truck going across a bridge that it actually isn't. But is there 30, 40, 50,000 tonnes a year coming out? I really doubt it right now. My best guess would be around 10 or 15,000 tonnes is probably coming out. Could be 0, could be 30, but I'm guessing it's sort of around 10 to 15,000. That would seem to be consistent with the numbers on imports I'm seeing into China and the production numbers I'm seeing in China.
And the second major supply shock is in relation to Indonesia, where you've got the state miner there, PT Timah. There's, like the media is playing catch up here and cluing on to the enormous story that is a giant corruption scandal that might have seen some $26 billion go missing in Australian dollar terms, that is. And okay, so do you want to just give a bit of background as to how you've sort of seen the supply from Indonesia and that basically dry up in 2024?
Yeah, it's been interesting, and it's probably long overdue. It's been amazing to me that PT Timah, tins at 14,000 makes no profit, tins at 25,000 makes no profit. The only mining company in the world that seemed to have its profits completely independent of the underlying commodity price that it produced. So I think everyone in the industry has known for a long, long time that things weren't above board at PT Timah. And I'm sure it went a long way up the chain in terms of where the money was actually going. I'm sure a lot of it ended up in Jakarta. But the new government and the Attorney General seem to be I'd say the good guys here, and the investigation is just turning every stone over. They're not stopping. They've arrested the finance director, the chief executive, the local police chief. It's who has a very nice house on Belitung Island, by the way, a very, very nice house. I've always wondered how he managed to afford that. It's not surprising to me. When I was out in one of the big dredges 10 or 12 years ago, you see how it works. So if they, you get these little hot spots out at sea where you might get some natural topography on the floor bed where the tin is concentrated. And you can be 20, 30 miles out at sea. And these dredges are enormous. I'd encourage people to Google, bucket line dredges in Indonesia, because you can't believe how big these things are.
We'll put some
They've got
footage
mobile phone masts on them and satellite. These are little villages out at sea. And so you get 5 bars of signal 20 miles out to sea on one of these things. And what happens is, the first mate will call his cousin, and, suddenly inside, a couple of hours, there's 50 small rafts of illegal miners on that hot spot, with a diver on the end of a bit of hose with a mask and a pipe running to a very basic sluice box on a raft, and they get all the good stuff. So that was one level of corruption. Of course, it's a nightmare for the fishing and for the aquaculture around Balatung and Island, and it's been a massive amount of environmental degradation because of it. And then on the onshore dredging, the same thing. So originally, again, if you look at any satellite imagery of Balatung Island, it is just a mess of historic onshore mining of these clay type deposits. I mean, typically low grade 300, 500, 600 ppm tin, but you pick it up clay, you run it through a little trommel to wash the clay off, and then you collect the tin in a jig and clean it up on a shaking table. This is $3-4 a ton processing cost. This is really, really cheap. So, and some of these guys made a huge amount of money mining $10 clay with a $5 processing cost. It was, even at 300 ppm can be extremely remunerative.
And is basically
and a lot of those concessions were owned by PT Timar. They weren't leased; they were being operated illegally. PT Timar was apparently having concentrate smelted at non-economic prices, should we say, at some of the other custom smelters. And they've tried to regulate it over the years. They tried to make it that all the tin had to be recorded. It had to be traded through the local tin exchange. And that didn't work. There was always ways around it. And now this crackdown's coming and production has all but ceased for 2 or 3 months. We've seen no exports in January, February, March this year. Last year, as I said earlier, they did 78,000 tonnes. They've just issued export licenses for 44,000 tonnes. And my expectation is we'll see somewhere between 35 and 44,000 tonnes come out of Indonesia this year, and probably not a lot more than that. So on the numbers, if that happens, we're losing 34,000 tonnes from Indonesia. We're losing probably 20, 30,000 tonnes from Myanmar. That's 60,000 tonnes in a 400,000 tonne market that's already in a deficit, that's seeing way above long-term demand growth because of consumer electronics. And on top of that, you're seeing massive demand growth from the solar sector, from the the data center sector as well. It's just like perfect storm. We've got no inventory. There's almost no new mine supply because the price was so low for so long that no one was looking for tin, and existing production is under extreme pressure. And then on top of that, you've got the threat in the DRC of the M23 rebels who now control the west of Goma, which is the main supply road into the world's third largest tin mine, being Afamin's BC mine. Which is supposed to go to 20,000 tonnes this year. They're doing a great job getting the tin still coming out, but there's clearly a risk that at some point that becomes a target for the rebels to go and take over that and to take control of it. So, the supply side looks damaged in the extreme at the moment.
Geez, in the context of rebels taking control of places, to tell you what, the Brooks Group is taking control of Australia. Isn't it?
You just want to have them on retainer, right?
Have a look at this. The Brooks King Air, the Land Cruiser of the sky, owned and operated by Brooks Airways, flying everyone in and out of mine sites. Learjet's doing Medivacs, mate. Is there anything that Brooks Airways cannot do? Because was there anything Brooks couldn't do? It was aviation. Not anymore.
Check.
Check, mate.
Do you know what, mate? Like, how many mining companies put their name on the company? Like the Lundin Group, that's about it. Mate, Brooks put their name on the airplane. Like,
it's not called Chris Ellison Resources, is it?
No,
because he doesn't have the balls to put his name to it like the Brooks Group does. They've put it on the block, and because they know they're going to deliver rain, hail, or shine, equipment sales, rental, and aviation. And it, mate, tell you what, if you can find something there that you cannot rent or buy in the Brooks Group, let us know and we'll let Stewie know and he'll just put it in there. Mate, unbelievable. Brooks Airways, that is the only plane you should be hopping in to go to a mine site. If it isn't Brooks Airways, don't turn up.
Give Stewie an email. That's it.
The flight of the Alpha Moon. Is it a fair assessment of the Indonesia situation that because you have ultimately pretty low, processing costs and you don't actually need heaps of equipment. The incentive is for so many of these, for so many artisanal miners on the smell of an oily rag to ultimately extract this. And as long as you have kind of, corruption in some respect, there's an incentive. You can get remunerated like massively for extracting it. And the result is what Indonesia's been depleting their tin reserves at a far greater rate than sustainable. And so they've had to basically ban exports until they sort that out.
Yeah, no, absolutely, and it's not just it's the most money you can earn on Belatung. I mean, apart from palm oil plantations, there's no, and it's such a lovely place. There should be massive amounts of tourism, but there isn't. You've got subsistence farming, fishing, palm oil, tin mining, pretty much it. So you can't blame the local populace for wanting to make $20 a day rather than $5 a day. So, and it's very, very tempting. And the higher the tin price goes, the more tempting it is. But if I'm the Indonesian government, and you look at what they've done on aluminium, on nickel, on copper, in terms of saying we need downstream processing in our country, we're just, if we're just a raw material supplier and we don't keep any of the value add, it's not good long term for Indonesia. So they've forced the copper companies to build copper smelters. They forced the nickel companies to go downstream to make stainless products as well. And I think they got the right plan for Indonesia in saying the same on tin. But it's a very different proposition on tin, because downstream isn't semi-finished product. You're talking about tin plate, you're talking about tin chemicals, plastic plants, you're talking about electronics. You're talking about billions and billions of dollars of investment into a workforce that doesn't have the skill sets to need that. So it's going to take time. But that's not a reason for not doing it. And I think if they can I think they should stick to a 50,000 ton export limit to allow that transition, to basically encourage the end consumers to build downstream value added industries in order to get hold of units. And I think that's what will happen.
So tin's gone up, 40% this year so far, roundabouts?
Pretty much, yeah.
Yeah, so what's the supply chain like for tin to processing, like the length of it to you? Like if the deficit's the way you're explaining it, how long does that take to really translate into the spot price, or has the 40% lift this year reflected that, do you think?
So that's obviously LME price. There's a Shanghai price as well. Because the Myanmar concentrates haven't been flying to China, China's been competing hard for the free market tin that's out there. So there's a number of custom smelters in the world that effectively mop up what's produced from the small producers. So you've got the MSC smelter in Port Klang, you've got Taisako, and they're the two big smelters, and you've got one in South America and a couple other small ones around as well. And what you've seen, for example, is the Tasmanian concentrates that come from Redison, which used to go to MSC and Taisako, are now all going to China.
Yep.
At ruinously uneconomic treatment charges, but they need the units. So China's got a protection there in terms of local premiums and import differentials as well. So I should imagine they'd probably break even, losing a small amount of money, but they're probably bullish on tin, so they don't mind that. What they're more concerned about is units. So the Western world smelters are short of units. And I know the Chinese are always competing for African units as well. So everything that comes out of Africa effectively ends up most of the time in one of the custom smelters. So the West is short and China's probably square to a small long at the moment. There's certainly some metal in China because of the downturn we've seen in China. It looks like Europe's the real short to me. In terms of the supply chain, it's 3 months from mine gate to metal, pretty much. 4 weeks on a boat, 2 weeks to turn it around, and a couple of weeks in warehouse and shipping to end consumer. So 3 to 4 months. But this has been going on for 3 or 4 months now since we've stopped exporting from Indonesia. So we are bang on the point where I'm expecting in the next month or two to see smelters exhausted of any inventory they're holding in terms of concentrate and metal. And we're going to start seeing metal premiums and prices really motor towards the summertime.
So what you're getting at there is the price hike that we've seen to date is actually in relation to the hungry smelters, because the smelters are short concentrate as a result of some of these supply disruptions, and then but it's not actually necessarily being driven by demand for the metal units on the other side. There might be some metal stockpiling. Is that the right interpretation?
I think that's broadly correct. I mean, there's some big hedge fund positions as well. I mean, there are some smart. There's not many people who trade tin. Those that do, the few that do, really know about it. I know 3 of them extremely well. I often speak to these guys because I'm known to know what I'm talking about, and I tell them the same thing, which is I think tin's going $100,000 a ton. And then you get a couple of drinks inside me, I tell you what I really think. So I've never seen, and I've been doing this a very, very long time, and I've never seen numbers like this. But but it can all change. Myanmar can turn the taps on back again tomorrow. Indonesia can decide that they want to start producing more tin. There's certainly units that can come from Africa with a bit of investment, and you can get a downturn in the world economy, and suddenly we're sitting around these numbers for a bit longer. But the long-term thesis doesn't change in terms of cheap to produce alluvial units, unless someone finds another Myanmar, which is always possible. I'm not saying that's not impossible, but I don't know where I'd look for it. The future supply of tin has to be hard rock mining, and there's only half a dozen projects that I've got any time for. And they're going to need hundreds and hundreds of millions of dollars in an industry which hasn't attracted hundreds and hundreds of millions of dollars for a very, very long time, where there's little expertise from the people who invest in mining projects in tin. So they're on a very steep learning curve before they're going to allocate to a lot of these projects. And we're going to need vast amounts of exploration spend in a market where there's not many geologists who've got any experience in tin. There's no quick fix here in a market. On the numbers, we're 400,000 tonnes a year today. If I'm bottom end, we need 500,000 tonnes by 2030 if we're going to do the green energy transition, or even part of the green energy transition. It's not possible. I mean, I can see no scenarios where we're producing 500,000 tonnes of tin by 2030.
Mark,
I barely see anywhere we're producing 430,000 tonnes.
We spoke with someone in the uranium world last night, and there was a sort of similar supply and demand type of dynamic playing out. This is sort of looking back 6 or 7 years. And one of the interesting aspects, he spoke about financial players actually going in and picking up, tenements that had been drilled a long, long time ago when the sector's really, picking them up when the sector's really hated. Have you seen any sort of action like that with more financial participants going in and picking up old sort of higher cost, I guess, tin projects on the back of, this thesis?
I mean, a lot of tin production historically has always been, informal sector, should we say. So, it's not like there's a bunch of old tin mines which are closed and, they closed because, most of them closed because they ran out of ore, generally speaking, or they're still running and just mining lower grade portions of it. I mean, I can't think of many great tin mines which are permanently closed, and the obvious one being South Crofty in Cornwall, which done, 520,000 tonnes of tin since 1600, and is going to reopen in 2 or 3 years' time. So, so that project's always been around. I've been picking up mineral rights in Cornwall for the last 10 years, knowing this was eventually going to happen. So we're going to have a lot of projects. We're drill ready on a couple of things, but the market isn't yet there to fund these things. Raising money for exploration on tin is a year away, because you're going to need the price to do something silly before people are going to start investing in these things. So, because it's been a graveyard for money for decades. Yeah. Most exploration's been a graveyard for money for decades, and tin's been, the graveyard of graveyards, because it's not really been worthwhile doing. I mean, so I've been involved heavily with First Tin. I founded the company. We've got the Taronga project in northern New South Wales. I simply love that asset because, one of the things, I say, there's no expertise in tin. Grade and tons are far, far less important in tin than mineralogy and metallurgy. It has to be cassiterite. It has to be coarse. It has to have a low processing cost, because, you can look at some assets. There's one in Kazakhstan which runs 1% tin, 400,000 tons contained, looks awesome, but it's all sub 20 microns, and I wouldn't buy it for love nor money because it's just so difficult to process that rock. Taronga's 0.15. It's got a sixth of the grade, but it's an open pit as a hill with a strip ratio close to 0, with the simplest hard rock metallurgy of any tin mine I've ever seen. So, you could be talking processing costs in tin, clays in Belatung Island at $2 or $3 a ton, or $100, $150 a ton for complex, fine-grained ore. So I don't know another metal or another commodity which has such a wide range of processing costs, all predicated on the mineralogy and metallurgy.
You said the traders aren't involved much in tin. Is there many mobs that are accumulating physical or not?
No. No, I mean, the Chinese government might have a stockpile, but China's long a tin. They've got a lot of tin mines, so there wouldn't be a reason for the Chinese government to have a strategic stockpile. The US government's down to 4,000 tons. That's it.
There's no tin trusts.
I'm keen to also just touch on the LME versus the Sheffy, and you ultimately alluded to it before, but can you talk to the arbitrage that exists between the two exchanges and what kind of dynamics would be you'd expect to see kind of some units move to the LME at the moment. Can you talk about that?
Yeah, so there's an import duty. I think it's 8%, but don't quote me on that. I'm sure you can look it up. I don't tend to look at the arbitrage because you can't really trade it. I much more follow the import-export numbers out of China because it's quite cool. Because when you actually do the numbers, give or take, if China's a net importer, tin's in a deficit. If China's a net exporter, tin's in a surplus. And that's pretty much been the case for the last 20 odd years. And it's just one little statistical quirk of the market. And China's been a net importer for the last 3 or 4 years, and I think they're about to become an even bigger importer. So it's just another tick in the box about, is the theory right? And it's one of the things, the more they import, the more bullish I get on tin.
Yeah.
Mark, one of the aspects of lithium, to sort of pull that analogy again, in the last couple of years, is that people were pretty mistaken in their insight into the inventory levels and the destocking and all these things. And there's a layer of more complexity with regard to energy intensity with lithium that I don't think is totally applicable to tin. But like you talk about the inventories you think they have in China. What's the sort of conviction in that level? Is that sort of pretty obvious and good data that you get?
Well, back when I was running a hedge fund, my data was going out to Geju and seeing my friends at Yunnan Tin and standing in the supply shed and counting how many bundles of tin there was. So, there's no alternative. There's no alternative to doing that. I know what 2,000 tons of tin looks like. I know what 5,000 tons of tin looks like. So that's always the best primary data. And they're the most generous people with the best lunches. It's one of my favorite places. I love Yunnan province, and Kunming is one of my favorite Chinese cities. That's just the way to do it. If there's trusting official statistics on these sort of stuff is I'd rather see it with my own eyes.
Beautiful, Mark. We appreciate the insight, and glad we could get some of your time to share your deep expertise in the tin market. Hopefully the years of torture pay off now, mate. So if the thesis pans out, and cheers for joining us on Money Mine. Yeah.
Okay, cool. I think it's going to be volatile. Is going to be the key thing as well. This is not necessarily going to be a one-way run. I mean, it's I don't know how the consumption side of things is going to play out, because I don't know. We're pretty close to a point, and I think by the end of the year we'll be at a point where there's no inventory. And then when there's no inventory, you can't actually have a deficit, because a deficit is the difference between supply and demand plus change in inventory. So the question you have to ask yourself on tin is, what price does supply equal demand, where demand is almost entirely inelastic? And that's going to create huge volatility. You've got 5 cents of tin in an iPhone. There's no tin price when you don't have an iPhone. You've got 25 cents of tin in a washing machine and printed circuit boards. There's no tin price where you don't buy a $500 washing machine. So these are interesting questions. When you look at a lot of industries are not going to not buy tin, and which ones aren't, and which ones are going to be price sensitive, and where's the substitution going to be? So we're going to see a lot of volatility. Is going to be my main prediction.
Mate, you're in trouble now. Trav's got your contact details, so he'll be on to you all the time.
He'll go back to dodging me now that the show's done.
He's like, I've got to do this to get these guys to fucking leave me alone.
Thanks for your time, Mark. Appreciate it.
Thanks, Mark.
I wish you all a good day.
Good luck with it, Cobber.
Likewise.
Cheers, mate.
Thanks, Mark. Bye.
Thank you.
Righto, there's part one, the bull from Tomo, the king of tin. Geez, doesn't tell you what, this grey silvery tin, it reminds me of a DSI friction bolt.
Really?
Or a DSI GUI bolt or an MDX bolt. Like, not because it doesn't, it's not made out of tin,
Yeah.
these bolts, but in this tin landscape, can you imagine taking DSI ground support out of the equation, which would mean you cannot support the Renison tin mine, Metals X's operation?
It's true.
And holy snap and duck shit, that would just send the world of tin into absolute opposite of free fall.
Matty, not just the world
Supply
of tin.
will be free fall. The price would be even if it's the price the king of tin, I reckon.
The world would come caving in. We wouldn't have cars. We wouldn't have electronics. No semiconductors. DSI is keeping the world afloat.
DSI has their hand on tin at the moment, and they can just take the pressure on or off whenever they want based on Metals X and Renison.
Yeah.
They are controlling things. It's not the king of tin. It's not Metals X. It is not China. It is not Myanmar. It is DSI. DSI are the most important factor here to keep Renison going.
And can you imagine running a tin mine and not just securing the bag just by, getting your gear from DSI?
geez,
You're shooting yourself in the foot.
Inexcusable. Inexcusable.
Absolutely.
And it will be shamed on the show when that happens. Right. Cheers, DSI, for keeping the tin barons happy.
Oh, I think this might be the second part of the mega tin chat. Hadley, I don't know if I told you this, but we interviewed the king of tin, which we'll play before this chat, which was
Okay.
Mr. Mark Thompson.
Mark Thompson, yes, I know him well.
And he of course shared the bull thesis of tin. I think we're gonna group his perspectives before yours, but not give you the ability to know what Mark had to say first. But
I am pretty sure I know what he said.
I think if you've had one conversation with him or followed him on Twitter, you'd get a good feel for the
You
narrative.
get a very good feel. He's the permanent bull.
He's
Permanent
the
bull.
perma bull. You're right. Yeah. If Mark's the king of tin, then what does that make you, Hadley? The prince of tin?
I wouldn't say that. No. Not that far up the high, not that high up the ladder.
The tin mercenary.
Unfortunately. Exactly.
Well, we're stoked to have you here because for the money miners that are not familiar with you, you're a tenured commodity trader. You've had a good stint at Trafigura historically at MRI, and you started your own commodity trading business called Afromet, where you are a regular and frequent trader of tin amongst other commodities, starting with the letter T, being tungsten and tantalum too. But we're very keen to get your insight onto the tin market from a commodity trader's perspective, Hadley, because we actually rarely speak with commodity traders. They like to keep in the dark. So we're grateful to have you here.
Not through a lack of interest on our end, but commodity traders can often be a bit shy. So it's great to have you on the show, Hadley.
They're very secretive, right? Even though it's pretty transparent market. But anyway.
Well, tin. So we
Yes.
had a great discussion, like we said, with Mark, and he's given that perspective, and we want to put a bit more, padding on the narrative. It was obviously quite bullish, and for those that aren't up to speed with Mark, they can just check him out on Twitter and get a bit of a feel for it. But we're keen to see how your views differ, and to do that, it's worth getting your views of the current demand supply setup. If you can sort of put that in a bit of a nutshell for us, Hadley, I think that'd be a pretty cool place to start.
So just on the general market, I'm sure Mark would have mentioned as well. So the market's roughly 370,000 tons a year, so very small, right? Mm-hmm. Relative to the big, let's say, other partners, copper, lead, and zinc, right? So it's kind of the ugly sister, if you want to call it that. With regards to demand, China's still the biggest consumer of the product, right? So of the 370,000 tons, 170,000 tons is refined in China, and held in China. So they dominate when it comes to where the market's going. Obviously, they've gone through their, let's say, reserves over the last 20 years. So they've been very stagnant on the, let's say, additional tonnage, additional units coming to market within China. So obviously now outside of China is really where that supply is supposed to come from. The biggest producers, like you guys would know, of course, Trav, Metals X guys, so obviously Australia, right?
Ding, ding, ding.
Obviously Africa, Alpha, Andrade, and Namibia, Brazil, of course, and Peru. with regards to the supply. And let's say the forward demand is there. There's lots of stories that support the narrative of a bull market in tin. So, I'm sure it's mentioned solar, EVs, just general electronics moving forward into our green revolution kind of new normal, right? So the narrative is there for tin to be, to have a bullish narrative. So that's kind of today, in my opinion, the demand and supply, kind of position. But yeah, that's pretty much it.
But you're of course got the purview of looking beyond just the big picture supply and demand, because you're active at a very micro level, trading bloody each individual tick. And one thing that I'd love to have you peel apart, Hadley, is the difference between the market for concentrate versus the market for the metal units. How are they different? What does that mean? And how do you look at the two separately and kind of, make decisions as a commodity trader?
All right. So that's the kind of the thing people should be concentrating on today. Yeah. Is exactly where the market is short. The market's not necessarily short the metal units in China. So tin refined, there's no shortage of refined tin today. Where the market is short because of the refining capacity in China due to Myanmar, Indonesia, is the concentrates market, right? So those refiners, smelters need to keep producing. So they're taking in same amount of tin concentrate, if not more, than they were previously, right? But that doesn't necessarily equate to there being more demand on the metal side. And those are the kind of two things you will try to separate when they say that, the market is tight. It is tight on the concentrate side going into China. You can see more units going into China. That's true, but those units aren't necessarily being consumed, right? So around the like I said, the Chinese refiners or smelters, they have to keep a nominal capacity going. Yeah. And for that they need feed. They can't get the feed from Myanmar or locally. They got to get that from the international market. And that is where your, let's say, alumni play comes in versus Sheffield, right? So your Shanghai thing. So
these are the two exchanges where you can trade. Yeah.
That's the two biggest exchanges we can trade. Of course, there's in the US as well, but the most trade is definitely alumni and Sheffield.
Yeah.
Yeah. So the market is short concentrates today, but in my opinion, not short metal. So that's kind of where we are today.
Yeah. So how do you evaluate, like how do you assess that claim? Okay, so the market short concentrate but not units. Is that to do with your assessment of the the relative arb between those two exchanges? Is that where you're making that inference?
So today the arb would be negative into China, right? Yeah. Right. So in theory, the Chinese are less willing to buy concentrates because they're short. They're still giving you the payable. So if you want to compare it to the usual suspects, MSC and Thai-Sarco, right? They would be at roughly a 92, 93% payable. China last year going into Q4 were paying you close to 96, 97% payable, right, on your concentrate. So that is a very good sign of how short those guys are with regards to concentrate units into China. Of course, now with the arb, that does affect them logically, right? So you probably around today at the 91, 92% payables, but still far higher than it was 3 years ago. Yeah. So on average, you're at roughly 86, 87% payable, and now you're at 92. That just kind of shows the way that, let's say, the Chinese receivers or smelters are trying to entice people to deliver material into China.
It's a very similar dynamic in the copper market as well at the moment. Would are we basically talking about the exact same kind of phenomenon where the smelters in China are the cause of the tightness, because there's they're looking to secure concentrate, but what's coming out of those smelters we don't are metal units, but we actually don't know what the inventories are and the relative demand of those units. Is that a fair characterization?
I think copper has a better story today on the metal side, right? So you're on the copper side, we're talking about TCRCs going to China, right? The market benchmark today is roughly $80, and today, if you're selling an Escondida clean concentrate, you're selling at negative numbers into China. So those smelters aren't making money, but they need the units. So I think it's almost the same as tin on the refining side, right? To get copper units into China, or let's say concentrate units into China, but the difference is in the metals market. Copper is a far bigger market, right? It's far more diverse. You have far more leverage products around copper. The derivative market is far bigger. There isn't, you couldn't trade copper on the long side like someone's doing today on tin. That would never work on the copper side, right? You couldn't squeeze the copper market. You can squeeze the tin market to an extent. So, so the size of the copper market with the size of the tin market is just, it's not, you can't compare them.
To play that out, Hadley, a bit further, that relation or that sort of similarity with copper, what we saw was that the biggest Chinese treaters, the people who charge the treatment and refining charges, the smelters there, ended up having a big get-together, the 15-odd of them, and, they're throwing out ideas of quotas as if it's sort of a meeting of OPEC, and, they're all going to inline cut. And it's kind of hard because, as we played out in the show about a month ago, they all have various differing input charges themselves, what they operate, how, power charges and these sorts of things. How has that played out in the tin market? How have we seen the refiners in China act to date? Have they got together, or are they more, not aligned?
I think they're not as aligned as the copper industry, no. Right? There's lots of individual players, of course, take out the Yunnan Tins of this world. There's lots of individual smaller refineries and smelters in China on the tin side. And there's, far more, as in, individual smelters and refineries. On the copper side, it's a national industry, right? So these guys get together and talk a lot. Doesn't always work though, but they get together and kind of decide what's going to happen. But you can see now on the copper concentrate side, it didn't work out so well, right?
Doesn't always work for OPEC either.
No, they've got to take basically refining capacity out in China, right? Which is not that easy to do. It's not you can't turn it off today and then turn it off back on tomorrow, right? Same with tin, you can't do that. So it's very tough for these guys. They've got to try to reduce costs for sure, but at current levels in the spot market, they're definitely not making money, and that can't be sustainable for longer periods of time. The copper market is going to get tighter in everyone's opinion. I share that narrative. 2020, 25, 26, 27. But yeah, something's got to give. Either you take away refining capacity, or you basically increase demand, increase supply. Increase in supply is not going to be happening anytime soon. So something's got to give.
We've also seen on the smelting front, that there is the need on the copper front for it to be reduced, but we've actually seen new smelters come online. Indonesia's mandated that Grasberg and the likes do that in country. We've seen in India new smelters being built as well. How have we seen that in the tin market? Is it relatively constant, the number of smelters and the global capacity?
The market's too small, right? You have the biggest, so inside China, Yunnan Tin, 170,000 ton captive market, 170,000 ton captive market. The balance, Malaysia, MSC, Thai Sarco. You have a recycling through Arubis in Germany. Obviously, you have Minsu in South America, right? You have White Solda in Brazil, and that's pretty much it. But that hasn't. There's no change. Of course, the US are talking about putting up a tin smelter in the US, which I think should have been done a long time ago. The UAE are discussing putting a tin smelter in that region, obviously due to power. Power is still the biggest problem for these smelters, right? And that's low cost power. So that there's talk about it, but not really been done because the world doesn't need it today, right? You don't need that additional capacity today. It's just not there.
So to change tack slightly, I think it'd be interesting to talk about the different jurisdictions regarding their tin production, Myanmar, Indonesia, Congo and the like. I think that'd be an interesting place to go. I'd probably be most keen to start with Indonesia and hear how you're seeing the current narrative playing out. Obviously, there's been some real big news, which we went into earlier with Mark. How do you see that narrative playing out?
So I think Indonesia's still going to be a very big producer, right? They're obviously not producing to to their export quota, which I think is 50,000 tons this year. I think they'll get to like 35,000 tons. But that only speaks to the narrative today that the market is not short tin metal. Yeah. If the market was short, they would find a way, my opinion. Yeah.
Gotcha. So yeah, what you're saying is if the demand was actually there, the tin would find its way out of places like Indonesia and Myanmar.
A couple of people would get on a boat and start dredging.
Correct. Tin is one of those things. It's a marginal market, right? So at these prices, 32,000, you're going to attract a few more tin units. Indonesia is very good at that. Yeah. Of course, they're trying to look after the industry. I don't consider Myanmar a big threat to the market, right? There's no real structural mining industry, right? But Indonesia, even though it is an agglomeration of many suppliers to the likes of the smelters in Indonesia, at least there's a bigger structure around that. And the tin units are there. Of course, it's depleting. Myanmar's also depleting, but they can ramp up, right? Should need be. If tin was at 45,000, I don't think that quota would be unused.
Yeah. I thought similarly, especially when you like factor in the cost basis of some of these units, right? It's like it's just crazy stupidly cheap to actually extract that tin.
I think I wouldn't take the Indonesian numbers as fact, right? Because no one really knows what it is. Yeah. So that wouldn't be the benchmark. I'd rather go for the actual assets out there producing. So I'd rather look at the Metals X, the Alphamans, Renison through them, and that's a proper benchmark of where the market should be. So if you look at Alphaman, Andrada, Metals X, for example. If you looked at even the the non-producing assets, or even the ones in Russia or Caspar Resource in Morocco, that break-even number is around 25,000, right? All in sustaining cost, not just not just your C3 cash cost, right?
Yeah, so I often think of like Metals X as like the whatever their costs are, kind of like they're the marginal supplier of tin in the industry, right? So they kind of like set the floor in some respects, and so of course if you have a price spike for the interim and you have some dislocation, then they make profits. But I sort of just think of whatever their costs are is like, okay, well that's where price will generally hover.
People talk about like that the marginal cost producer being the artisanal miner, right? That's kind of what everyone kind of that's the story everyone talks about. But if you look at it realistically, take Alphaman out the picture with their 12,500 tons of metal contained per year, right? They've traded between 7,000 and 9,000 tons consistently for the last 10, 15 years, irrelevant of where the price is. Yeah. So I don't think, it's not, even though the price is higher, it doesn't mean that more tons move, right, within that period. And it kind of evens out, kind of averages itself out over time, because let's say for an artisanal miner, for example, of course he cares what the price is, but it doesn't have the luxury of keeping tonnage in his back garden until the price is high. That does not happen. What he produces today, he sells today. So that marginal producer story, that's not reality.
There's another element of I guess the tin market I'd be keen to unpack with you, Hadley, and as a trader of the commodity, do you have like a view on this story that's emerged of hedge funds squeezing the tin market? Like, how does that actually eventuate? How does it emerge? How does someone do it? How do you assess that claim as being?
How do you assess that? You'd have to build up a position over time. So everyone's talking about this long May date, right? Which is pretty interesting. It's 4,000 tons in total, sitting on May 17th, prompt May 17th. So that person, obviously in today's backwardated market, looks like a genius. Only problem is you need to find someone else on the other side of that trade. The other side of that trade is not 4,000 tons. Your natural short market in tin on a daily basis is max 800 tons, maybe 1,000 tons. So you short 3,000 tons, Tom Cash, right, on that trade. So I'd love to see what happens. I'm definitely watching that. That's going to be an interesting thing to watch. I think the funds are getting involved. It's clear. You can see the whole complex moving up. Copper, lead, zinc, tin. I mean, zinc 29,300, whatever, 2,900. Don't understand why. Copper, yes, 10,000. Okay, the narrative is there. But the whole complex has moved up, and logically, tin goes with it. Yeah, but the tin market is so small. It doesn't need a lot of money for it to move very quickly, right? To move the copper market, you need a lot of money, right? To move the tin market, you need a couple of $1 million, and you've done a good job. Yeah.
Really? So how far could you move the tin price with a couple $1 million? Asking for a friend. I don't have.
Asking for a friend. Okay, you put it this way, you need far less than you'd need for copper. Put it that way.
How much have you moved the tin price with a couple $1 million?
No, that's only more than I would have. But
Hadley, that makes me skeptical of some of the commentary I've sort of heard. People saying, some of the biggest hedge funds in the world are now starting to get active in tin and whatnot.
Yeah.
But I just can't imagine that it's a big enough market unless we're talking about such a small portion of one of these big funds. Just how's it going to interest them?
I think it's just a proportion, right? They're probably long metals in general, and they allocate X amount to keep that index balanced and buy tin. That's what I think. And when you say, big positions, Sheffy today, so China, your China stocks, 15,000 tons? Yeah. LME today, I don't know, 4,500, 4,700 tons. So in reality, if you did not have access to physical units, you didn't trade it, you weren't long the physical metal, you didn't buy from Indonesia and store it somewhere, how else are you going to get hold of those units? So how big can that position really be? Or how much money can you really allocate? Yeah, because the rest, it's a tradable product, right? The only things you can see is LME and Sheffy. And if you, as a fund, decide to get long through a broker and the LME, you can do that, right? That's fine. But you can't buy more than what's there, right? So in reality, if you take 4,700 tons and every fund in the world say, I'm going to be long tin, well, it's not a big number, right? You know what I mean? So how much money they really, really allocate to tin? It's not a lot.
That was my thinking.
Do you ever see, in what ways do commodity traders kind of do commodity traders ever actually get wind of when artisanal supply or whatever comes onto the market, but it goes through these dark routes? Let's say China's still getting their hands on a bunch of supply out of Myanmar. Can you ever really see that, or is it opaque?
Well, you should see it. You should work it out, right? If you produced 168,000 tons last year of refined tin in China, 2022, 170,000 tons, yeah? With basically 8,000 tons of metal contained not coming into the circuit and importing the same amount of tons internationally, somewhere that tons came from. It came from somewhere.
Gotcha. Just back it out from the refined metal. Yeah.
Exactly. Just take the refined number, see what they've exported, see what they've imported on the concentrate side, and you can work out that number, right? That material comes in. Otherwise, you'd be short then 8,000 tons. You should be at 160,000 tons. Yeah. There wasn't 8,000 tons more coming out of Africa, right? Only 8,000 ton market, so you couldn't have done that. Alphaman's already fixed into Yunnan tin, that's 12,000 tons. So that's already calculated into that number, right? You take Metals X, they produce their 2,000 tons per quarter. That doesn't change, right? And Indonesia only exports metal. So there's something that doesn't add up, and that's the number.
Yeah. Gotcha. That makes heaps of sense. But, despite your, so you've got this view at the moment that it's actually the concentrate market that's tight, not the metals units that is the constraint. Does that basically moderate your actual outlook on where we are at the moment? I think tin kind of it brushed above that 35,000. It's dipped below it now. Are you kind of pretty have you got pretty moderated outlook in the short term as a result?
I think there's a long term fundamental story for tin for sure. I'm also a perm bull in the long term.
Yeah.
in the short term, I don't see the fundamentals supporting a 32 to 35,000 tin price. That is my opinion, because if it was, you'd have China basically enticing people to deliver tin to them, which is the biggest market, not happening. Your premiums are almost nothing into China. There's premiums in Southeast Asia because of the Indonesian metal problem, which goes into Europe. So yes, Europe's paying you whatever, $1,200 premium. Okay. US $1,800 premium. Okay. But it's not exorbitant, right? It's not, there's no guys crying out there saying, guys, ooh, we are short tin for the industry. The industry is not short tin units. So if the funds believe in tin, great. The market is not as diversified as copper for you to build a strategic long position. Building a strategic long position in tin, where are you going to go? There's no optionalities around tin contracts, right? So if you wanted to be long calls on tin, where are you going to go? Can't do it. You want to be long material, you got to buy the metal for the LME or Sheffy, which you can't get hold of. And otherwise, you got to buy the miners. How many miners are there today? Alfman, Andrada, Metals X. Anyone else? Yeah. Who else is there you're going to buy today?
It's a very short list of names.
Very short list of names. So, yeah.
Yeah. So I think the optionality might come from buying the undeveloped projects in some ways. Yeah, they often trade like an option, but yeah. I think
longer term, yes, you want to be long the assets, but I wouldn't be long today outright on metal. I think it doesn't take a lot for the tin market to move.
Yeah.
Right? And like I said, the whole complex is going up, so people are allocating funds to the complex. That pushes up your tin price, which is natural. But at one point, it's going to dislocate. Yeah. At one point, the ARB is going to be in so much favor of China that they're just going to kill this LME structure very quickly. They need roughly $4,000, right? Today at 1,100. But once it gets to 4,000, they have material they don't need in China, right? That's shown by just the Sheffy stocks going up and up and up in a backwardated market where the ARB is negative, logically, because they're delivering to the Sheffy. But once it opens up, that tonnage is going to end up in Europe. Yeah.
You know what I think we need, JD?
What's that, Matt?
I'm stealing this idea from Tin Investor, but we need a Sprott physical trust.
I was just thinking the same thing.
So I would long term. That's always been something I wanted to do.
Yeah.
But, I haven't got the guys to back me.
Mate, if you pull it all together, we'll launch the product on Money of Mine.
Yeah, it's just not enough. I think tin's just always been. I was telling someone about a week ago. Tin's like Cinderella, yeah. So you have your ugly sisters, copper. You have the mother. Sorry, the stepmother, which is copper. Your ugly sister, lead and zinc, yeah. And Cinderella is tin. Unfortunately, in the tin story, Cinderella never gets the bloody ball, right? So she does all the work. She cleans up the house. She does this her lifelong. She's waiting for the fucking fairy godmother. Doesn't come, right? And that's tin. Tin is the Cinderella that keeps everything together, but doesn't get to see the fucking fairy godmother, right? And that's but I think it's going to come. It just needs time. But if not now, I think now is not the time. I think the EV story is there. I don't so much like the solar story. I think solar is a driver of tin today, but I don't think it's a long-term driver. I think there's cheaper ways to create energy, right? If you consider the total cost of producing a solar panel, there is per kilowatt hour. There's cheaper ways to produce power, right? The hydro, geothermal, wind, right? There's far cheaper things than solar. So I think that's not the long-term driver, but obviously EVs, and which I think people are talking about now a lot, and I can kind of see it playing out over time, is this whole data storage AI kind of thing. If these things do get built out, you're going to need a lot more tin, right?
How about if the world goes a bit more the way of hybrids over the medium, short to medium term, over pure play electric vehicles?
EVs?
Yeah, is there still
you still need double the amount of tin in a hybrid as you do as an ICE vehicle. So hybrid or EVs, they consume the same amount of tin.
Yeah, that's what I was
It doesn't
asking,
make a difference. It doesn't make a difference. So it's not like whichever way you go from BEVs to EVs, you're going to need more tin, right? So let's say the catalyst for the tin market, I think is when you do get to that 40 million number, yeah. But I think I think we worked it out once. Up to 13 million EVs, you're still fine, right? There's enough tin around. But once you kind of crack that number, there isn't new supply that can support that. And if there's an additional industry that comes on top of your normal sold EVs, like this whole data center, then there will not be enough tin. That is unfortunately just fact. If you want to take all the tin in the ground, do all your resource modeling and say, yes, Alfman, Caspar, wherever, Brazil, there's just not enough tin around. No.
We should do a calculation how much tin's needed per data center.
That would be a great calc. But if you take just
Matty
a
can
normal...
run the uranium one on the side.
Yeah,
He'd be so pumped.
I'd like to see those numbers as well, if you let me.
My takeaway from this chat, Hadley, is that I need to do my work on copper instead.
Why? What was your view?
Oh no, you always want to believe the bull case. You just get all pumped up, like, oh yeah, tin to the moon forever, alpha moon.
I think tin will have its day. Like I said, I think it's Cinderella. She's coming to the ball, but not now.
Just to round out that supply side, Hadley, we'd asked the question of a couple other people we'd interviewed over the past few weeks, and the way I sort of put forward the question was Myanmar came out of nowhere to an extent about 10 years ago. Yep. Are there places that you potentially have heard murmurs of that could do the same type of thing, even if it's just for, a 5-year period, artisanal type mining to disrupt if we were to see a kick up in tin prices?
I think you got to go. I don't think that the artisanal mining jurisdictions, right, that aren't developed enough is going to be the supplies of new metal. I am a firm believer in Central Africa. I think Congo is going to be, right? Congo went from, like I said, 8,000 ton supplier of metal to the market to a 20,000 ton in 6 years, right? And that's just with one asset. That's just Alphaman. And I travel to the Congo a lot. There are a few more Alphamans out there, right? So I think that when the market needs another Alphaman, it will find it. I'm a firm believer, right? Obviously it takes time, but I think the DRC is just a basket of amazing things, right? And tin is one of them.
Can you shed a bit more colour on the reports we've sort of seen about the sort of civil state in North Kivu?
North Kivu, yeah, in the Goma area, yeah. Look, so as of today, there is this traceability system called ITSKI, right? Managed by PACT in the DRC. And they basically, that is your sustainable traceability system. They did stop tagging and bagging in that region, but they're back to it again. It is a big supplier of tin to the market, and I'd say probably more tantalum than tin. Yeah, it's a bigger tantalum supplier. So when it comes to, let's say, shocks to the tin market, I would say that is going to be, I don't think that'll happen. It's not big enough. Definitely affect the tantalum market, should kind of spread out, because that is the tantalum region, if you want to call it that. So if nothing leaves there, or there is that war breaks out and there is, problems, that'll be affected. Not so much the tin supply. Tin supply, there are many routes out of the Congo, and there's many regions in the Congo. So the north-south Kivu is one area, but your Tanganyika region north in Maniema is probably a bigger producer of tin than that area itself. Then, of course, you have the Monono area, which you guys all know. That produces a lot of tin as well on the artisanal side, and in that region, and that goes through Lubumbashi. It doesn't even go through, towards the east. So it won't affect the tin exports at all. I would say.
Great to get some colour on that.
While we've got you too, Hadley, I've got to ask the question about why does zinc stink?
What does zinc stink?
Yeah.
There's just enough of it. It's just people can paint you all these pretty. I mean, I used to work at MRI and I did lead and zinc as well, and we used to do our demand supply figures. And no matter how you look at it, there's just enough zinc around. Right?
Sorry, South 32 Graham Kerr.
So I'm not a big fan. Like I said, the whole complex has gone up, and now everyone's long zinc. I'm two-minded about that. Copper, agree with it. Lead, now with the secondary market, it's almost 60-40. So do we need new lead mines? Not really, right? So that of the metals today, I would say copper is definitely the one that you're going to be pushing. And to the long term, of course, lead and zinc is not my favorite, so I can't say much.
Nice and concise as well. A lot of takes there. I love it.
Bloody brilliant, mate. Thank you so much for joining us and sharing your expertise in an area that we are very curious about, but don't have very much expertise at all. Much appreciated.
That was an absolute pleasure.
Thanks,
really
Hadley. Appreciate it, mate.
Thanks a lot, guys.
Righto, boys. I wasn't there for part 2, but
it's pretty cool. I think it was the first time we've tied in together two different points of view, separate in the same episode. So I hope the Tin Barons liked that one. I think it's more tin content than any other channel has ever put out. So it's got to be something to keep you happy there. But I loved it. Plenty to learn.
There is more tin content, manganese content, and what's some other PGM content that you won't see anywhere else, I don't think. But tell you what, we're interested in it.
Mate, next up, HBA. We're going.
HBA. What's something other really random we could get into? What's that? What's the shit in the
mineral sands, rutile?
No, no, we've already crossed that one. What's the English project for Anglo? What's that mining?
Polyhalite.
Polyhalite. I reckon we get into polyhalite.
Yeah. High purity quartz, that's another one we could do. That's very niche. Garnet. Oh, I'll blow your mind with garnet, Matty. Just you wait.
Lead. No, not lead. No, there's a lot of lead. Anyway, let's get back to life. Right, thanks to the partners as always, lads. VRIFY, GetWet Solutions, DSI Underground, Silverstone, CRE Insurance, 29 metals, give them bastards a call. WA Waterboards, Brooks Airways, JD, who else?
We've got K-Drill.
Oh, that's
Hooteroo, Money Miners.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.